Hello A plus traders, this is the second module of the price action course. The module is all about Fibonacci applications. I believe you have heard of Fibonacci application tool. It is a technical tool used to spot price retracement and price extension levels. So in this course you're going to learn more about what is Fibonacci, the difference between Fibonacci retracement and extension, how to plot your Fibonacci's on the chart, and how to use Fibonacci's to identify key price zones. It's called the Fibonacci Confluence strategy, and you're also going to learn how to trade Fibonacci levels. But before we jump into the lesson 1, I want you to hit the subscribe button in this YouTube channel. So you have to subscribe to our channel, A Plus Trading Hub. Click on the notification bell so you get an update of all our videos. What is Fibonacci? This Fibonacci sequence was actually developed by an Italian mathematician called Leonardo Bonacci. Yeah, I can't pronounce that name correctly, but at least Bonacci, yeah, Bonacci. In the 12th century, he was considered the most talented Western mathematician of his time, and he was one of the greatest as at that time. Although himself did not come up with what is called the Fibonacci sequence, but he certainly introduced the phenomenon in his book Liber Bacci. That is the foundation of Fibonacci. He was a great man. Look at the man here, the Leonardo Bonacci guy. He's handsome, right? Fine man. Alright. Though rumors has it that Fibonacci died poor. I don't know why. Maybe it's because the Fibonacci concept was a bit complicated. So that's why in trading you need to keep things simple. Forget about using so many indicators on your chart like using this. So you need to keep things simple. When you keep things simple, the better and easy for you to trade and make more money. So you keep things simple. Don't die poor like Leonardo Bonacci. Here's the Fibonacci sequence. It looks crazy to me at the start. The first time I saw this sequence, I was like, what is this? And I was just looking at it. But at the end of the day, I got to understand how it works. As can be seen, each number in the sequence is the sum of the period 2 numbers. Thus, the Fibonacci sequence can be summarized using this formula here. I'm not a mathematician though. Calculation gets me bored, but this is the formula here. If you are good in mathematics, you can do that formula stuff. I don't want to bore you with the formula, with the calculations and everything about this, but I want you to have a clue what the sequence looks like. That is why I'm letting you see this. So that is just the sequence there. So you can use this. If you're a mathematician, you can use this to calculate the whole sequence stuff. I don't need to bore you with that or distract your brain with that. I want to make this course and this model very simple and straightforward for you, because the aim is to make money, not to know some boring calculations. So this is how Fibonacci retracement and extension levels are derived. To derive the 61.8% Fibonacci levels, you need to divide the current number with the next number. Like for example, this is still about the sequence here. You see here we have 55 here, and the next one we have 89. So if you should divide 55 by 8, you get 0.618. So that is how you derive each of the sequences, just by dividing a previous number with a recent number, and you'll be getting the sequence just like that. But then the golden ratio for Fibonacci is 161.8% level. That is the golden ratio of the Fibonacci. Anytime price reaches the 161.8% Fibonacci level, either the Fibonacci retracement or the extension, or you call it the expansion, just be rest assured that once price gets there, there is high probability that price will make a U-turn, that price will reverse from there. So when you are trading the Fibonacci sequence, you need to pay more attention to the 61.8% level, the 161.8% level, and also the 78.6% level. So these three levels are key levels. As from my experience, these are the three key levels in the Fibonacci retracement or extension sequence. So when you are using the tool, you pay attention to what price are doing in these three levels, then because that is where you have a good lead on what price may do next. So let's look at why Fibonacci analysis is popular in trading. Fibonacci levels are geometric numbers, so the retracements and the extensions appear pleasing to the eye. Well, that is true. Fibonacci levels provide objective price reference points and thus remove subjectivity when used correctly. So when you use the Fibonacci tool correctly, you won't have any reason to doubt what is happening on the chart. Fibonacci retracement and extensions are among the invisible levels of support and resistance. So you can also use the Fibonacci levels, either the extension level or the retracement levels, as your support and resistance zone too. I said this earlier, these are the most important Fibonacci levels: the 161.8% level, the 78.6% level, and the 61.8% level. So this is an example of how the Fibonacci tool looks like when it is drawn on the chart. It looks like this. So you pay attention to this level here, you pay attention to this level here, and also pay attention to this level here. These are the three most important levels to me. From my experience, these are the three most important levels. During my analysis, when I'm trading, I take off all other levels and I allow only these three levels to be on my Fibonacci tool when I'm doing analysis. This helps me not to get distracted with other levels. I only focus on these three levels. So it's part of keeping things simple. So I take all of them off and focus on just these three levels. So let's look at the difference between Fibonacci retracement and extension. Now, Fibonacci retracement levels are those that are lower than the 100% of a price swing, while extension are those that are above 100%. Fibonacci levels are used as support and resistance and for projection of profit target. You can use all these levels here as your support and resistance levels too. You look out for price making a U-turn from all these levels. It's very important, and another reason why it's very popular is that majority of traders use it too. So imagine if out of 100 traders, 80% of these 100 traders are using the Fibonacci tool to spot a U-turn. Definitely price is going to turn because the volume is what increase. So how to plot Fibonacci levels? All you need to identify is a distinct high and low, then plot the Fibonacci levels by dragging it from one extreme to the next. So you plot your Fibonacci level by dragging it from the left hand side to the right hand side. When plotting your Fibonacci, you have to know that Fibonacci work better on a trending market. So if the market is ranging, maybe market is in an accumulation phase or a distribution phase, you don't use Fibonacci in such levels. You use Fibonacci in a trending market, maybe an advancing phase or a declining phase. It's important to select the candlestick wicks so as to obtain accurate results. For an uptrending market, it's drawn from the lows to the highs. So if market is moving in an uptrend, you draw your Fibonacci from the previous low to the recent high. If the market is trending down, you also draw your Fibonacci from the previous high to the recent low. So that is how you draw your Fibonacci on your chart. This is an example here of how you can plot a Fibonacci retracement on the chart. So you need to drag the tool from an high to a low. So in this example here, this was an high here and this was the recent low at this point, at this level here. So you can see how I drew it from the left to the right hand side. Then you have this Fibonacci levels here. Once you just drag it from your high, previous high, to the recent low, you will see the corresponding levels. It will just appear on the chart, and all these colors you can change them to your taste. We look at that when we are doing the set examples. To plot a Fibonacci extension on your chart, you need to drag from the first impulse to the first pullback. In the first module of this course, we discussed about spotting an impulsive move. So here was an impulsive move here. So you drag from X to A, from A to B. You now see the levels here being plotted. So when you pick the Fibonacci extension or expansion tool, you first identify the impulse, then you click on the chart, drag it from this first point to the point A, from the point A to the point B. The point A to B is the pullback point. Then the point X to A is the impulse move. Once you just plot it, you will see these levels pop up. So you can now use these levels here to reference your take profit level, your target. So let's say price was at point B when you plotted the Fibonacci extension, and you take a trade around here at the point B. So you can reference your take profit, your target, at the 61% expansion level, extension level, 78.6%, or the 161.8% extension level. So that is how you use the Fibonacci extension tool. This is the best part of Fibonacci. Let me be honest with you. I don't really use my Fibonacci to spot retracement or to spot an extension like target zones, because I can actually do this with other technical tools like the pivot, the support and resistance. So basically what I use my Fibonacci tools for is to figure out key price zones using the Fibonacci Confluence strategy. So to use this Fibonacci Confluence strategy, you will use the Fibonacci Retracement tool. So look at this chart here on the screen. Remember I said you need to use Fibonacci tools on a trending market, not a ranging market. So first you need to spot the trend. So from this chart now, price was in a downtrend before now, then found support here and start moving to the upside, forming a series of higher highs and higher lows, higher highs and higher lows. When you spot a good trend like this, all you need to do is pick your Fibonacci retracement tool, plot from the first swing low to the recent swing high, which is here. Then you pick the tool again, the Fibonacci retracement tool, plot from the second swing low, which is this point, to the recent swing high again, which is still here. Then you pick the tool again and do the same thing, plot from the third swing low, which is here, to the recent swing high, which is also still in that same point. So when you do this, you take all the swing lows, you plot from all the swing lows to the swing high. You notice that we have so many levels, Fibonacci levels on the chart. So when you see all these levels, you try to identify where we have a cluster of the levels, like where all these Fibonacci levels mesh together. So from here now we can identify that this level here, this particular level here, this one here, we had cluster of like up to 3 Fibonacci levels very close together. So you mark that particular level by maybe plotting an horizontal line. You mark that level. Then this other level here, this other one here, this place here where you see me mark with the rectangle, that is where we have Fibonacci level clustered together, like they are up to 3, very close together, while the rest are not close together. So you identify where we have a confluence of these Fibonacci levels. When you identify them, you plot an horizontal line on the chart on that particular price level. when you plot the horizontal level, you delete all the Fibonacci retracement tool you plotted on the charts. This is because you want to see a clear price action on those levels you just identified, on the new key levels you just identified. So you need to delete all the Fibonacci levels on your chart. So when you delete all the Fibonacci levels on your chart, this is what you get. Since this was an uptrend and we identified these two key levels, which is the 1.2969 price zone and the 1.3129 price zone, these are the key levels on this chart now, after we did our Fibonacci Confluence strategy. So what we are looking out for now is that anytime price reverse, this is the current market price where we have this green ribbon here, that is the current market price. So anytime price reverse and retest these are key levels, we look for buying opportunities from there. That is what I use my Fibonacci tool for. That is the most important thing I use my Fibonacci tool for. I don't really use it for the retracement level. I don't really use it for the extension levels to know my profit target. I use it for this Confluence strategy, because identifying this key level is very good. And from my experience, anytime I identify these key levels using my Fibonacci Confluence strategy, once price gets to those key levels identified, I always see a reversal. So what you need to do is just wait for price to retest this key level and you watch out for price action there. So for example, like this one is an uptrend here, and you wait for price to, let's say price pushes down and retest this other key level. So you look for price rejections from this key level, or some bullish chart patterns, or also some bullish candlestick formations from there. When you get that, you buy. So it's a way of making sure that you identify the key levels in a trending market, because a market might just reverse and may not find support in any of those Fibonacci levels, but it will really find support or resistance at these key levels. So I use the Confluence to spot the key level, and I also recommend you do that too. Here's how to trade the Fibonacci levels. Look for convergence of the Fibonacci levels, especially the 61.8 and the 78.6% retracement, or the 161.8 and the 261.8% extension levels with the previous support and resistance. So once your Fibonacci levels converge, as there is a confluence of your Fibonacci levels and trend lines, or major swing highs or low, or support and resistance, you look to trade from that particular point. So the more technical tools converge at around one point, the more likely it is that price will turn around there. So after drawing your support and resistance and your trend line, and you plot your Fibonacci tools, and you notice that one or two of those levels, price levels, converge with your trend line, or a major swing high or low, or a support and resistance point, just be rest assured that price may likely turn around from that point. So that is how you trade Fibonacci levels, because market is trending and you plot a Fibonacci retracement tool and you watch out for reversals at the 50% retracement level or 60% retracement level. No, it will fail you. It may fail you. Really, it's going to fail you. You have to make sure that these levels converge with maybe your trend line or major swing highs or lows before you can say, okay, fine, that is a good point to trade. The probability of price turning at a Fibonacci level greatly increases when they converge with other technical tools, but even on their own, Fibonacci levels often provide strong support and resistance. Well, that is true to some extent, and I've explained that already in the previous lesson. Generally, the higher time frame are more significant. The Fibonacci level is likely to hold. Just like other technical tools, you plot your Fibonacci's on the higher time frame. Don't go plotting your Fibonacci on the 15-minute time frame or 30-minute time frame. That is bad. You will not get a concrete reversal or trade buyers if you do that on the lower time frame. Make sure your Fibonacci is on the higher time frame from the 4-hour above. Also make sure to apply your Fibonacci levels in the direction of the trend. Like, make sure to identify the trend first, know if it's an uptrend or a downtrend, so that you can apply the Fibonacci tool correctly. And also in the Pro Trader course, we discuss in-depthly on how to fine-tune your entries and exits applying Fibonacci's too. You don't just jump into a trade because price have reached a Fibonacci level. There are other things you look out for, and so we discuss this in the Pro Trader course. So if you want to join the Pro Trader course, all you need to do is click the link below this video. Here are a few quiz for you. These quiz are good, and I advise you to attempt to answer these questions. This quiz will help evaluate your progress on this course, so I encourage you to go through all of them and attempt to answer all of them too. There are just few questions, so just attempt it. Don't forget to subscribe to this channel and click on the notification bell so you don't miss any updates on this channel. If you learned a thing or two from this video, kindly like this video. And if you are confused on a particular lesson and there are things you don't understand, comment on this video. I will look at your questions and give you more explanation and possibly give you more set examples to make you understand better. Thank you for your time. Don't forget to click the link below this video and learn more about entries and exits and how to spot some big moves in the market.